Is Ospreyeye from mychartcoach.com, and we're going to take a look at some of the ticker symbols that were in play today. Okay, first up, let's take a look here at NXTD. Okay, very nice move today. Closed up 17%, nearly 18%. RSI is in the 50 to 70 bull zone. FASTO is now above 80, so we'll have to see if it can head higher in the overbought power zone. Nice bull cross on ADX with plus DI crossing minus DI to the upside. Okay, the bullish development today on this daily chart was the close above the middle Bollinger Band, the dotted purple line, and above the 50-day simple moving average, currently at 160. That's this green line. And also above this red descending resistance line. So this is a very strong close today. We'll be looking for the 50-day simple moving average to turn into support at 160. If it holds, the next target to break is the 100-day simple moving average at 180. If it can get above that level, then we'll be talking about potentially testing this $2, $2.10 level up here with the potential run up to the 200-day simple moving average. In order to get this new uptrend going, though, it needs to turn the middle Bollinger Band into support. The one red flag currently on the chart is the gap between high of day yesterday and low of day today. So there's an unfilled space between those two candles. The share price may come back at some point to fill that gap. Okay, so if the share price does pull below the 50-day simple moving average tomorrow, you want to see the middle Bollinger Band at 144 hold. Notice there was a PSAR bull flip. The green dots are now below the candles, so that's a signal the chart's heating up. That there was a nice bullish volume spike, so there was good volume behind the move. And then down here on MACD, you've got the bullish crossover on the 12, 26, and 9, and then there was a recent bullish crossover on the 8, 13, and 5. So the chart is really heating up. It just needs to turn the middle Bollinger Band and 50-day simple moving average into support, and a possible new uptrend could begin. Okay, let's look at EBIO. This is a similar setup. If you look here, we've got RSI in the 50 to 70 bull zone, still a little bit of room to run till 70. FASTO is now at 91 and at overbought levels. There was a recent bull cross on ADX. You've got plus DI above ADX and minus DI. Notice that the black line crossed the red line to the upside. That was another bullish signal. This chart has been heating up since closing above the middle Bollinger Band on the 21st. We put out alerts that day that the chart was in play, and then as you can see, it's just been heading higher ever since. The close today was above high close horizontal resistance, so it closed above this 150, 152 zone, and then it also, the big close was above the 50-day simple moving average, this green line here at 160. That is going to be the key level to turn into support. Just like the last chart with NXTD, the 100-day simple moving average is just above at 180. That's going to be the key level to break. If it can get above that, then we could be talking about a potential run back up to $2 and 208. Pretty interesting how these two charts are very similar and have very similar targets, and they're both just keep that in mind. Many times these stocks are moving with similar patterns due to program trading. Notice that the break today was above this long red descending resistance line. That was the break last Friday above that level. That was a signal the chart was really heating up, along with the break above the middle Bollinger Band. And so now we've got a break above the sideways channel. So the chart is really heating up. It just needs to turn the middle Bollinger Band, a 50-day simple moving average, into support, and it could continue this new uptrend. There was a big volume spike today, so good volume behind the move and recent MACD bull crosses. Okay, let's take a look at MBRX. This was the big winner, closed up 65%. The red flags on the chart here are RSI at 94. Okay, so at 94, it's almost maxed. And then you've got FASTO at 96. So both indicators are signaling very overbought, very frothy. Okay, you've got plus DI that's pushing way up here. Many times when you get minus DI down here near zero, that's a contrary signal, signaling that it's extreme oversold and that it's due for a technical bounce. And so that's our setup now. Okay, so if you notice here, end of the close, MBRX was pushing pushing really hard, closed near near 330 and near high of day. If you look at the share price trading after hours, it's down to $3, so it has been under pressure. That is not what the bulls want to see. They wanted to see more upside action in after hours trading, and then they want to see the share price stay above 328 in pre-market trading. If the share price is below those levels, it could signal a possible pullback. Notice that the close today was well above the upper Bollinger Band, which is at 222, so it closed a dollar higher than the upper Bollinger Band. You know, that makes it so that you know, it's set up to consolidate and pull back into the bands. The close today was above the 200-day simple moving average at 212. So if it does pull back, that is going to be the big key support level to hold. If the 200-day simple moving average breaks, then there's still this unfilled gap below. We were talking yesterday about this possibly topping out here at the 200-day simple moving average. That was really sweet that it broke above. Huge winter day today for everyone. Congrats. You know, that unfilled gap below is still a red flag. It could still pull back and fill that gap at some point, so keep an eye on it. A drop down to the 150 zone would fill the gap. Yeah, and then if you look here too, this is a multi-day run. Notice that there's 4 volume bars in a row with the increasing volume. With what we, you know, yesterday it was looking like the climax spike with the pullback from high of day, but today with this giant volume and push above the upper Bollinger Band and then pullback in after hours trading, it does look like the climax spike is today. If you look at the trajectory on MACD, look how vertical the MACD line is on both time frames. That is unsustainable. Stocks cannot continue going in a completely vertical trajectory. At some point they have to level out and pull back. Okay, and so we're thinking possibly a pullback tomorrow. You know, it could keep pushing higher, and if it does, the key level to break, if you look at this daily chart, is going to be 350. Notice that was resistance back here in October and November. Okay, that's going to be the big resistance zone. If it can break above that, there isn't much resistance up to this next white candle, the closing price up here around 430 or so. So if you break above 350, you could see a run up to $4. You know, if it gets above $4, if you notice that it was a really big drop from 6 all the way down. You know, it found you know, it dropped all the way down to 2, then bounced back to 4. So a break above 6 could possibly see the share price run back to a break above 4 could see the share price run back to 6. Now we don't want to get ahead of ourselves. It is hitting resistance here in the 330 resistance zone. It closed above this key November resistance level at $3. That is going to be the big level to hold. If you see it drop below $3 tomorrow, you could see it pull back down to this 275 support zone, which was the high close, and then possibly pull back to test the 200-day simple moving average. You know, this is a parabolic move. Notice how it's pretty much straight up. You know, this is what we call setting up for what we call an Eiffel Tower setup, where you might see a steep decline on the pullback. We'll see if it can sustain. If you look here at the MBRX 15-minute chart, you'll see here that today at the open, you know, there was the shakeout. It had a gap down open, and then it formed another candle below the middle Bollinger Band. But the third candle of the day here at 10 o'clock, this move above the middle Bollinger Band and EMAs 4, 8, and 13, that was a signal that it was in play today, that it was going to be back in play. And then notice how the candle started riding EMA 4 support higher. You know, there was a small close just below, right at that level here, but the EMA 4 support held the entire day. You know, there was a close below that level at 315, but then it perked back up, and you know, it closed here at the high close level at 328. You know, above EMA 4, super strong, super bullish. It's just pushing hard and very frothy. Okay, on a pullback, you want to see the middle Bollinger Band at 286 hold. If that breaks, you could see a drop all the way down to the 50 simple moving average at 234. Keep an eye on MACD. There was already a bearish crossover on the 8, 13, and 5, and the 12, 26, and 9 is pinched. If it crosses over, that would be a red flag. There was a PSAR bear flip right at 330, and so notice that was the first bear flip of the day. So that happened while the share price was consolidating for the last couple of hours of the day, and so it's showing that 330 is this really big resistance level, and $3 is currently the key support level to hold. So a break above 330 tomorrow is going to signal a run higher, possibly to 350 and maybe to $4. If there's a break below $3 tomorrow, you know, that could really be putting that 200-day simple moving average in 220 on deck. Okay, let's look here at SHIP. Okay, SHIP is a stock that has been performing really well. It closed up another 5% today. It's been on this multi-day uptrend. Look at all the green volume bars in a row. This is on a basically an 8-day run if you count the volume bars. And then today, it had that big gap open and a doji formed. And anytime a doji forms during an uptrend, that signals danger, possible consolidation. This pattern formed today, bearish doji star. It's the opposite of the, if you watched the FRZT video yesterday, we showed the bullish doji star, which is a bullish reversal pattern. This is the inverse of that pattern. This is the bearish doji star. And this forms during an uptrend when you have multiple white candles and then you have a gap up open and a doji forming end of day. Many times that signals that the candles will work their way back into the bands. Okay, so for this stock, 110 is going to be the big level to break. If it can't get above 110, you can see it work back down here. You really want, if you're a bull, you really want to see the $1 level hold. That's down here at EMA4, currently at 98.6. So on a pullback, you want to see that level hold and the uptrend continue. They did have news out today about terminating their offering, their at-market offering equity offering that they've been doing. So many times that would be beneficial to the share price. If they ease up on selling shares, there is a small gap down here. Okay, and then it looks like there's a small unfilled gap here. So there's a couple of unfilled gaps in the chart. So if this pulls back, you could possibly see them fill the gaps. If it drops below EMA4, then you're looking at the 100-day simple moving average at 84 is the big support level to hold. This is a very strong chart. Candles are just pushing really hard. It's starting to get frothy. If you look here, you've got RSI at 82. And then you have FASTO at 97. So FASTO is almost maxed. It's almost completely overbought. And then once again, look how minus DI is at 8, and then you've got plus DI at 44. So this is just showing that it could be due for a technical pullback. Okay, and so if that happens, then what we want to see is support hold. If you look here at this daily chart here, this will show you a little bit of the upside potential. We put out alerts here when the share price broke the middle Bollinger Band. Then we put out another alert when it broke the 50-day simple moving average, and then we put out another alert when it broke the 100-day simple moving average. So we've been alerting this on the way up. And so today, we're putting out the alert about the bearish doji star. Notice that the close was right here at the April high close resistance level, right at that level. And so it needs to close above that level. And when it does, that's when we'll have the bottom of the gap. There's a gap back here between these candles, and then the 50 or the 200-day simple moving average at 150. That will be at the target if there is a break above 110. If it fails to break 110, we'd like to see the dollar level hold on a pullback. Okay, here's a stock to keep an eye on, DCTH. This has been a high flyer. It had that really big run, and then it consolidated, and then it bounced, and then now it's pulling back. And then if you look here at this 15-minute chart, you will notice that there's this descending triangle pattern has formed. So notice how there's descending resistance and then horizontal support here at 20. Okay, so it needs to hold the 20 level, and then it needs to break above 21. Notice how the last candles of the day have worked their way into this really tight flex point. The flex point means that there's a change in trend that is imminent. It's going to happen soon. This pattern is going to break tomorrow, and a new pattern is going to emerge. If there's a break above the red descending resistance line and the 50-day simple or the 50 simple moving average, that is going to signal more upside potential, and that's going to put 24 back on deck. If the 100 simple moving average breaks in horizontal support, that's going to signal downside risk, and that's going to be putting the 300 on deck. The 300 simple moving average down here at 16. So keep an eye on DCTH. It is set up for a move tomorrow out of this pattern. This consolidation pattern should break, and a new pattern should emerge. Bulls are looking for a break above resistance. Bears want to see that support level break down. If you look down here at volume, okay, there was volume was light during the middle of the day here, and so that usually when you have a consolidation pattern and a pullback and it's holding support and you see really light volume, many times it's a signal that the sellers have tired. So we'll see if the buyers can push DCTH higher tomorrow. Okay, let's take a look at FRZT. This is an OTC play, that Garfield Go that we've been talking about. It closed up today 4%. Volume is very light. It's one of the lightest days since the stock has been in play and since the pullback. We were looking for a break above 50 on RSI. Fasto is still at 3.94 and at oversold levels. What we want to see here, okay, so currently the closing price here on June 7th has been holding, and notice how the candles have been riding EMA4 resistance lower. So now today's candle has wedged just like yesterday's and the day before, right in between support and resistance. Okay, so tomorrow one of these two levels should break. You know, another doji could form between those two candles, but the odds are that either support or resistance is going to break tomorrow. If there's a break above EMA4, that's going to signal upside potential, putting the middle Bollinger Band on deck at 0.0041. It needs to get above the middle Bollinger Band to get a new uptrend going and to possibly run back up to the upper Bollinger Band. If this high close here on June 7th support level breaks, then you've got the 50-day simple moving average right below here at 0.0018. That is the huge support level that must hold. If that breaks, there's going to be major downside risk, and you could possibly see triple O's on deck. If it holds and there's a break above EMA4, FRZT could get moving again. Keep an eye on it. Take a look at INNMF. Okay, this is the daily chart here. Notice it was trading around 50 cents here on Monday, and then on Tuesday there was this giant gap down. Okay, and it bounced off of low of day. It hit all the way down here. It 2 cents, maybe lower, and then it bounced above, and then it had this nice move today. It closed up 73%, still at extreme oversold levels on RSI and Fasto. So those are still at very, very oversold levels. And then you have candles working back into the bands. If you look here, the lower Bollinger Band and EMA4 are all the way up here near 20 cents. That is the first resistance level on this chart. So there's technically not a lot of resistance between these two levels, and so but keep in mind that the lower Bollinger Band and EMA4 are coming down fast. So eventually the candles are going to work their way back into the bands. The way this was trading, it looks like it could try to push higher again tomorrow. Sometimes when these dead cat bounce plays have a good bounce like today, they consolidate sideways and work their way into the band sideways. So we'll see if this can work its way into the bands on the way up. Notice there was really big volume yesterday and then even larger volume today. So money is starting to pour into the move. If you look here at the weekly chart, you'll see here that this was it had ran all the way up here to $1.60 in January, pulled all the way back. It was holding the 50-week moving average, had formed a double bottom, but then for some reason it just totally tanked this week. There's not a lot of information on the stock, and I haven't done the research. OTC Markets doesn't have any kind of info on this, so it's an extremely risky play. It just caught our eye on the big move and this big chart setup. So for us, this is just purely technical. We have no idea why any of this is happening. I haven't done the research behind it, and there wasn't readily available information on OTC markets. So yeah, we're just looking at this as a possible technical bounce play, and then look at the long lower wick off the bottom and the huge volume spike this week. So there's been heavy loading off the bottom of this chart. Not sure what they're planning on doing with this, where it's headed, but it is in play currently. If you look at the INNMF 15-minute chart, you'll see here this is the big drop on the 27th, and then today had this nice move all the way up to 7.4, 7, up into the 7s, and then look at end of day. It pulled back the last half an hour of the day, and then on the last candle of the day on the 15-minute chart, there was this giant volume spike. So you had two volume spikes end of day, and notice how it was larger than the volume spike on the 27th. So this is the biggest volume since the stock has been bouncing, and it happened in the last 15 minutes of the trading day on a pullback. It looked like the market makers pulled the share price back to fill a big load. And if they did load, they might want to see the prices pushing higher, obviously. And so we're just interested by this. We want to see how this plays out tomorrow. If it can get above 7, it could possibly really get moving. If it drops below 5, that will signal downside risk. Okay, and then one stock to keep an eye on here is AVGR. This is another stock that is wound tight. We've been tracking this play. We have a lot of stocks that we just monitor. that have setups that are getting ready to move, that hasn't made it yet, but we're looking for a technical development to signal it's time to take action. And so for this chart, what we're looking for is a break above this red descending resistance line and the 50-day simple moving average currently at 46, the green line. Notice how ascending support and descending resistance have come to a flex point here. Okay, this is a symmetrical triangle pattern, and what we're looking for is a break above the red line and the green line. That should signal a break above 46 and a close. It has to close above that level to be a good play, that it's finally ready to head higher. Now, if it drops below the green line and it fails to hold middle Bollinger Band support, then you're talking about a drop back into the 30s, possibly test this 35 to 38 zone. So it's really important that the green line holds. And then this is another chart that it looks like the way the candles have wedged between resistance and support, that a move is coming tomorrow. I mean, it could form a very small candle again tomorrow in between these two levels, but the chart is signaling that tomorrow could possibly be the day that this pattern breaks. So have it on the radar, to see if potentially, it can break out higher. Many times when you get a chart that wounds tight, that gets wound super tight like this, there's some kind of news event or PR that's a catalyst to send the share price higher. Take note that there was a big volume spike last week on Friday, and then there's been this light volume on the up days, so it looks like people have loaded and they're holding. There was the big volume down here that got our interest in the stock after it had pulled back, and so we've been waiting since back here in May for this to really heat up. And so we're patiently looking for this break above the 50-day simple moving average, and when that happens, this should turn into a good play, so keep it on the radar. Okay, thank you very much for viewing this video. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis.